Thanks so much for joining us for our next in our series of Meet the Lender. And today I am delighted to be joined by Marylen Edwards, who runs MT Finance's Mortgages Division. Now, let's just give you a bit of background on both MT Finance and also Marylen as well. So MT Finance have been doing buy-to-let mortgages for a couple of years, maybe 3 years now. But historically, they were a bridging lender. So they've gone into the buy-to-let space. So they've been lending for years and years. They kind of understand property, they understand property people, but what they wanted to do is rather than just kind of keep their offering to bridging finance is expand that and serve the buy-to-let market as well. Cue Marylen Edwards joining them to set that up for them. Now, Marylen is an amazing woman. She actually used to work with us as a broker when I joined MFB, crikey, 20 odd years ago. So she has worked as a broker. She's also worked at lenders, both on the commercial and the residential side of lending there as well. So she's got huge amounts of knowledge in terms of things from both the broker side and also the lending side. So she's joined MT Finance. She's gone in and set up their lending arm. And I think really her objective is to create a mortgage offering which is not bound by algorithms and box ticking. Obviously, they have kind of some rules in place. There always have to be some rules, but actually what she's really looking to do is make good commercial decisions to be able to kind of lend money to good landlords. The other thing that she really prides herself on, I know when I've spoken to her all the time, is that she really looks for great service as well, because it's all very well saying yes to applications, but if they take forever to go through, then that's not good for anybody. So very, very happy to have Marylen Edwards from MT Finance joining us today. Marylen, thank you so much for joining us. I've just done a little intro into who you are and the great things that you're doing there at MT Finance. And we're really delighted to have you along today. So thank you very much for giving up some of your very precious time. So you're in the hot seat today. We're going to be asking you a series of questions about MT Finance. And we're going to start off with saying, who would be a typical client or borrower in your case for MT Finance?
I don't think there is a typical borrower because our policy is so diverse. So definitely a lender that needs to use a specialist market or use a broker for assistance. But the borrower themselves, we range from a multiple of first-time landlords, first-time buyers, expats, portfolio landlords, LLPs, limited companies, multiple complex structures. So there is no sort of set type. In terms of what we see the most of, probably limited companies are taking up the larger percentage of the applications now.
And are you seeing certain types of limited companies, would you say?
In what sense?
So say, for example, like layered limited companies or companies where the shareholding structure is a bit unusual, or is it generally just husband and wife own a limited company, they're directors and shareholders? Is it quite straightforward, or do you tend to come across some of the more quirkier?
We see in both. More so the layered companies, the more complex company structures tend to be on the more specialist products as well, on the more quirkier asset classes or the more diverse asset classes, and more so into the semi-com as well. Whereas you might have a couple of businesses buying a property, so they'll be the whole route through to the main SPV. But for general standard residential properties, typically just an SPV.
Nice. Thank you. And what would you say are the kind of three, the terminology USPs, but things that really set you apart from other lenders in your space?
Definitely our 125 stress, where we, on the 5-year, where we don't differentiate on the tax brackets. I think that's seen us being able to assist quite a lot of portfolio landlords who otherwise would be penalised at the 140, 145. I suppose our service, so we're not always the cheapest, but it's the speed to completion. We have a very hands-on proactive completions team, and once the case has gone end to end, we remain proactive on behalf of the borrower and the broker. Third thing, I suppose we have a unique broker relationship manager team. So if someone's got something really quirky that they want to discuss, they can phone in. They don't have to wait to speak to their BDM, and the guys will help rip apart the deals. They'll look at leases, they'll look at quirky titles, title splits. They'll look at historic valuations just to see whether or not we can lend. And that's quite a uniqueness from a lender's perspective, and it helps get the deal right. So when it's keyed, there's just an ease of transition then, because all the issues or the potential issues have been sort of like ironed out.
Yeah, and do you know what, actually, it's interesting. I remember we talked about this when we met up previously, and you were saying that you have got like such vast industry knowledge, and you've really made it your job to educate the people and pass it all on. So that if someone phones up and says, well, I've got this weird thing on the title, they have the knowledge to be able to pull the land reg, look at it, and actually say, yes, we think we can help, or actually, no, this probably wouldn't be one for us. And that is actually a very unique thing. And I just want to go back to the 125 thing. So I think what you're saying there is that when you're lending to individuals, not limited companies, the rental calculation, irrespective of what tax rate they're paying, you're only doing a 125% calculation.
Yes, on the 5-year fix, yes.
That really sets you apart, actually. That's really good. Yeah, I should imagine you pick up quite a lot of cases from that. Okay, good stuff. Next question for you, Marylen. You're doing very well so far. And now I'm going to throw a curly one at you. Sorry. What would you say is the most common reason that MT have to decline applications?
Aside of valuations, because obviously I think they're the industry's biggest bugbear for declines or not being able to make a deal work. I think it's just sometimes, dare I say this, the speed of the broker and the client wanting the application done, and sometimes something so simple gets missed, and then it gets picked up at underwrite. And when you then go back on it, the broker will say, oh, I didn't think that was relevant. But it is if you looked at our policy or you looked at the process, and that extra sort of take a little step back, check something before you submit it, because that's 5 minutes that can save weeks of work to have to start again somewhere else.
Yeah, definitely. And I think you're absolutely right. I think brokers do have the kind of thing where they decide what's relevant and what's not. So it's better just to have everything on the table, and that applies, I guess, to the borrower. And it's interesting, actually, just to touch on the valuations, because they are a bit of a shocker sometimes, aren't they? And I think there is a perception amongst mortgage borrowers that somehow the lenders control the valuations. Like, we've had people before saying, honestly, we've had people saying to us before, well, clearly that lender doesn't want to instruct money. They must be telling the valuer to knock everything down by 10%. Does that actually go on?
No way. Listen, if we had any influence, I'd be lending a lot more than I actually get through the door. There is guidance that has to be applied in line with the RICS, because they are chartered surveyors, and they transact under RICS guidance. So they have to apply certain things to those. But in terms of what we want, it's more in line with our policy and what we'll accept. It's not, we expect you to knock 10% off this or downvalue the rent by 50 quid or anything. You know, there's none of that goes on. And it's very hard for us sometimes as well, because sometimes we can be empathetic with the applicant, and when we do our own Google searches and stuff. My biggest thing is, a lot of it comes down to, there is the guidance issues and there is the lender's criteria requirements, but a lot of it comes down to personal opinion as well. And I think that's where things then fall out of bed, because it should be an independent, non-biased report. But there's always an element that sometimes some of the most stubborn points with a valuer is down to personal opinion.
Yeah, it is subjective at the end of the day, isn't it? You know, for example, is a property lettable? Well, that's a subjective thing, isn't it? You're relying on an opinion. So yeah, thank you for clearing that one up. Okay, now if someone wants to make a mortgage application to MT Finance, and actually this would probably apply to all lenders to some extent, because you're all looking to understand broadly the same thing, what advice would you give them to ensure a quick and smooth application?
Well, we do speedy apps for some of the brokers who have aligned themselves to the way we work. So the decision in principle, when it comes back as an accept, sometimes we get people wait weeks before they take it to full mortgage app. But if you put it to full mortgage app straight away, then that's that thing done out the way. You don't have to be chased by us. You don't risk the rate, risk losing the rate because the products will change or anything else. Initially now, the way our new system works is, the minute you get the FMA, it triggers an email with the initial needs list. So you know straight away what we want. Regular borrowers, regular brokers know what we want anyway in terms of the initial parts of what we need. If we can get that information in, and it's only 4 or 5 items straight away, and we'll get the val instructed at the client's request. So if they want it done before underwrite, we're happy to do that. We've had things go from application to offer in sort of 8 to 14 days. And some of our brokers, the offer will go out the door. The legals have been working in the background. We get the cot straight back in again as well. Wow. But it's all about the documents. I think there's too much that's drip fed. Unfortunately, you know, you get one at a time. Whereas if you've got returning clients, you should have it packaged. You should just be able to go, here you are, here's the docs. And possibly the other bit, the chasing bit, or the bit that then causes delays and problems, again, is brokers taking 5 minutes to actually read the information they're being sent by the borrower and not just forwarding it on to us, because it tends to be those documentations that'll have things that maybe that we necessarily might not should have seen, or will cause us to raise more questions.
Yeah. That's a big one, isn't it?
Yeah.
Where you send in something which is kind of not been asked for, and then the lender has to look at it. Once you've got it, you can't simply ignore it, and then it can raise more questions. I think that's a really valid one.
Yeah.
Perfect. Good stuff. Right, next one. Now we're moving on to the broader buy-to-let market here and your kind of view on that. So one of the questions that we're seeing a lot of people asking us at the moment is whether the changes that are coming with the Renters' Rights Bill are going to impact the way mortgage lenders lend. And I think particularly what they're thinking about is the removal of ASTs, the abolishment of Section 21. I think that's kind of where their heads are going. So as a lender, do you have any plans at the moment to change anything in response to the Renters' Rights Bill coming into law?
At this moment in time, no. I think we're going to be guided by what the final paper actually looks like, I think, in terms of that, because there's a lot of speculatives floating around and the draft paper's been circulated. However, that could well change when it's rubber stamped. The ASTs at this moment in time, our policy is we can't have ASTs more than 3 years, and if a tenancy is rolling, we don't like it to be more than 3 years. So that is going to have to be looked at in line with the tenants. But again, it'll be how we formulate the policy off the back of that will be how the new contract is structured, because they're coming away from a standard AST format as well. I'd like to think that this time, rather than allow any old shape of format AST that's floating around, because you can download one, and there's clauses missing from some that we have to take extra care of. It'd be nice if a standardized format came out that had to be used, and that way the necessary requirements in there regarding the rights of the rolling tenancy, the lender's rights to recourse, which is where our view has to be taken as well, can all be looked at and then applied comfortably, rather than on a case-by-case basis with some things, because some things will show what can happen and who gets right to access the property with the landlord and who doesn't. It just needs to be standardized, so it makes the lender's life easier, and they can formalize policy once and once only, without having to say to people, can we see the AST before we lend? We can take it as verbatim. It's going to have the same clauses.
That sounds good. Okay, fair enough. So kind of for you guys, it's no plans currently, but let's just see how it looks when it actually comes into law. That's good. Okay. And
I mean, in terms of the changes themselves, from a non-lender's perspective, or maybe even a little bit from a lender's perspective, there's lots of things that I suppose I agree with, I disagree with. It's very much done in the tenant's favour, but certain parts of it are beneficial to the landlord. And I suppose one of my hopes is the decent home standard will almost be like a means test, a bit like room sizes for HMOs and everything else. So in a sense, going back to what we talked about previously, it's going to mitigate a valuer's personal opinion, because all they will need to put on the report is it meets the decent home standards, which means suitable to let.
Yeah.
So I'm hoping they will implement it properly. When they did all the changes for the additional licensing and the selective licensing, the room sizes, they did a generic across all local authorities about what the minimum sizes were and everything. So I'm hoping the decent home standards will have something similar to that, that takes away the valuer's rights to a personal opinion.
I'd never actually never thought about it in that way. That's a really interesting one. So there could actually be some positives to come out.
There could be some positives out of it. Yes, there could be.
Okay, and thank you. And your last question is, where do you see the future of the PRS?
Oh, God. It's unpredictable, isn't it? But the market is so resilient. I mean, 30 years plus in the industry, and the ups and downs and everything else, and landlords carry on. People offload properties because they don't want the hassle anymore, but other new landlords come in, diversification happens, landlords just plough on. And I suppose if you're in it for the long term and the end gain, then that's a good thing, because it'll always be there. I mean, we lack housing stock, so there's always going to be a need. Landlords get battered by regulation. I mean, the rental writers bill, the one that's going to cause maybe a few issues for some landlords, having to get properties up to scratch. EPCs are another thing that we haven't yet touched on, but again, that keeps getting pushed back, and landlords are a bit unsure themselves what to do with things and whether or not they're keeping their properties because of it. But there needs to be, I suppose, a clear definitive to stop people just selling because they're unsure. It's weird, but the market just carries on, doesn't it? I mean, all the times it could have crashed and gone, and it's just there. There's always going to be a need for rental properties, always, and things that make life easier for the landlord and the tenant. And hopefully parts of this renters bill will make life easier, because there will be a standardized thing. And tenants will feel a bit more secure as well. And I think if tenants are secure, it'll give the market a bit of stability in terms of rents as well.
Yeah.
If someone knows they can stay in one place for a bit longer, and they get settled and they get their kids into school, or whatever else happens off the back of it, that they will pay the rent increases, because it almost becomes a factored way of life. And it gives the landlord less worry about void periods, more peace of mind. I can't ever see that there won't be a sector, and there won't be an active sector.
Good. That's good news for me.
And well, actually, I hope so, because it's my business as well.
We'd both be pretty in trouble if it wasn't. But actually, one of the things you just mentioned, which actually I would like to touch on today, just because in terms of the lenders that we've got lined up for this series, you are the only lender that does semi-commercial, which you've only just gone into. And I think it's a lot of landlords are kind of looking at their portfolios, they're thinking about ways to drive up rents and all those kinds of things, you know. And semi-commercial is definitely becoming more of a type of property that people wouldn't have considered before, they're now moving to, which I guess is probably partly why at least you've recognised that opportunity at MT Finance and gone into that space. So I suppose it'd be really interesting just to kind of hear your thoughts on investing in semi-commercial. Is it a good place to be, as a lender? Why have you chosen to go into that space? Because I think people some people actually are probably contemplating it and sort of would be interested in your view.
Yeah, I think we've upset the market a little bit, because we've taken it under our buy-to-let product range rather than our commercial range.
You're like charging people loads of money extra.
So we've sort of aligned it that it confuses people, because when we launched our commercial, we had loads of inquiries for semi-com, and then we were saying, but we've always done it. It's in our buy-to-let range. It's been out for a while. And yes, when we started, we only did it on the resi uppers, resi rents, but now we look at the whole freehold. And I think for landlords who want to diversify, it's a bit of a comfort for them to learn about the commercial market. The commercial market is extremely different. The leases, the length of the leases, your rights with the tenants, it's much more in depth. It's much more granular in detail. There's much more legal requirements that sit around it. So for someone to learn, a semi-com is a good way for a landlord to diversify, purely on the basis that they've got the resi rent still, which is going to cover probably 2/3, if not more, of the mortgage. So that in itself is a comfort while they're learning. And I think if we had another crisis, if they buy the semi-com in the right area and the right place, and they've got the right knowledge, they also know it's an easy switch to resi. If the property becomes vacant, it's on a high street that's now part and part, they will get permitted development, it will become a resi. So there's not so much of a risk element, there's always a plan B. And I think more and more people are seeing that, and it's allowing them to expand in ways that maybe they hadn't thought about, because you get a lot of large flats above semi-commercial as well. Yeah. Or maisonettes, they are now being converted into HMOs with landlords who buy them. So they've got space to utilise, and they've always got a comfort sitting in the background in terms of industry or businesses closing, etc. And I think it's a good way to dabble and to take that next step.
Good. Semi-commercial it is. Marylen, you've been a superstar as always. Thank you very, very much.
No, thank you for having me.
Us. Thank you. So there we are. That was Marylen Edwards of MT Finance. What a wonderful lady, and what a fantastic offering they have. Thank you so much for joining us and having a watch of this. We do hope you found it really useful and interesting. We're going to continue rolling these out over the coming weeks, but if there is a lender that you would particularly like us to meet up with, we will absolutely do our best. Just drop a note in the comments below, or indeed any questions you'd like us to start asking people as well. The format is yours. This is very much for your benefit, and we'd love to hear what you think. See you next time.